Assalamu alaikum. This is Zeeshan Hasan. Uh, in this class, we will be discussing questions from Advanced Insurance from ACCA Study Hub. The question is Banana Company. Okay. Now, let us start looking at the question first. Banana Company, it is 1st July 2005. Okay. You are manager in Rape and Company, a firm of chartered certified accountant. You have been temporarily assigned as audit engagement manager has been taken because the engagement manager has been taken ill. Okay. The final audit of Banana Company for the year ended 31st March is near to completion, and you are now reviewing the audit file and discussing the audit with junior members of the audit team, obviously. The following exhibits provide information relevant to the question, background, information about Banana Company and its trading activities. Exhibit 2, audit completion review. Point you have been identified from your review of the audit files. And 3, audit team members' concerns, details of concerns about the conduct of audit. So this is information should be used to answer the question requirements. Okay. Now the exhibit 1, Banana Company designs and manufactures equipment such as cranes and scaffolding, okay, which are used in the construction industry. The equipment usually follows a standard design, but sometimes Banana Company designs specific items for customers according to contractually agreed specifications. The draft financial statement shows revenue of 12.5 million, profit of 400,000, and assets of 78 million. Okay, the following information has come to your attention during your uh, review of the audit files. Okay, during the year, a new range of manufacturing plant was introduced to the factories operated by Banana Company. All factory employees receiving training from an external training firm on how to operate the machine safely at a total cost of 500,000. The training cost has been capitalized into the cost of the new machinery, as the finance director argues that the training is necessary in order for the machinery to generate an economic benefit. Well, first issue we found out over here in this para in this line that during the year they bought some new sort of machinery, okay, uh, for the in the factory, and for this purpose they provide training to the employees, and training was provided by some third party. The training cost was $500,000. Okay, and it was capitalized. Well. As per the IAS 16 property plan and equipment, and in IS 38 as well, training costs such as I mentioned here, that how to operate the machinery and all cannot be capitalized. It cannot be capitalized uh, at any cost because we do not have control over the employees and they can switch the jobs, right? So it is wrongly capitalized, and therefore, uh, this if it is not corrected, it is uh, you know assets are capitalized. You can say overstated by 500,000, and the profits. and you can say also overstated by 500,000. The expenses are understated by 500,000. Okay. With regard to the question, the revenue was 12.5 million, net profit was 400,000, and total assets of 78 million. So it is material because if this 500,000 is capitalized and it cannot be expanded, so the company is in loss by 100,000. We got so much points over here, right? First, what we'll say as per I-16, the training cost cannot be capitalized as no control over employees. Two, if not corrected, assets are overstated and profit overstated, as I explained. Okay, expenses are understated. So, this many things are here from the question. Now, let's move on further. After the year end, Chatty Company, a major customer with whom Banana Company has several significant contracts, announced its insolvency, and the procedures to shut down the company had been commenced. The administration of Cherry Company have suggested that the company may be able to approximately 25% of the amounts owed to its trade payables. A trade receivable of 300,000 is recognized on Banana Company statement of financial position in respect of this customer. So 300,000. Just a second. Let me take out my calculator here. Yeah. So 300,000 into 25%. So here again, we have to review. Let me see the question further. Anything further? No. So another concern over here is regarding total receivable is 300,000. Okay. The 25% of it is 75,000, right? So we have to look at according to the IFRS 9 that is there impairment was recognized or not, right? As per the rules of the impairment of financial instruments, that we have to recognize the some significant amount every year. It is not or not if it is not recognized again, the expenses are understated and the reversal is overstated. It shows, furthermore, it shows that 300,000 receivable is there. That means no impairment of receivable was recognized earlier. So this is, decreasing the expenses and overstating the profits again, right? Now, audit team members, one of the junior member of the audit team, voiced concerns over how the audit being managed. The junior said that following, I have only worked on two audits prior to being assigned to the audit team of Banana Company. I was expecting to attend a meeting at the start of the audit where the printer and other senior member of the where the partner and other senior members of the audit team discussed the audit, but no meeting was held. Wow. In addition, the audit manager has been away on holiday for 3 weeks and left a senior in charge. However, the senior was busy with other assignments, so not was not always available. Right? So, so many issues over here. Uh, as per the ISQM1, it is the duty of the audit engagement partner to lead the audit team, to conduct the planning meeting of the audit officially in which, and then they have to make the audit team with the relevant and appropriate uh, working experience regarding relevant industry experience. So manager was possible as possible during the count and help the client staff count some of the raw materials. As I had been to the inventory count, I was asked by the audit senior to challenge the finance director regarding the adequacy of the provision against inventory, which the senior felt was significantly understated. Okay, so here again, the junior member of the audit team was given the task of auditing the goodwill which arose on the acquisition and made during the year, right? So again, once again, he was a junior guy. Uh, he was a junior guy. He was less experienced, and goodwill is such a complex transaction. It involves a lot of assumptions in it, and it should have been done by some experienced person who has the more of the experience, but it was done by the junior. So that means there can be a lot of mistakes, or then it may not hit the calculation. The task of the auditing of the goodwill may not be well audited. I was also worked on the audit of inventory and attended the inventory count, which was quite complicated. Again, it was a complicated, and he's saying that he was there only. No other member of audit, the senior member was there. So again, that means the complications was there, and there are a lot of chances then that inventory count was also not well audited. Okay. Now the banana company has a lot of work in progress. Okay, he said. Now I totally as usual, blah 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 is giving his reasoning. Then, as I had been to the inventory court, I was asked by audit senior to challenge the finance director regarding the adequacy of the provision against inventory, which the senior was felt significantly understated. Now, the junior was asked to challenge the finance director, and he was not uh, there to supervise or help his junior there. It was all left on the junior team member again. There was no supervision there. There was no proper leadership was there. Again, it is a poorly handled stuff. Lastly, we found that we were running out of time to complete our audit procedures. The audit senior advised that we should reduce the sample sizes used in our test as way of saving time. He also suggested that if we pick an item as part of our sample, it would be time consuming to find the relevant evidence. Then we should pick a different item which would be quicker to audit. See, so finally, then he said, finally, we found out we were running out of time to perform the audit procedures. The senior asked that we should reduce the sample sizes, and if sample size is taking a lot of time, we should take that sample, which will less time consuming. Again, seems that they are there to compromise the quality of the audit and just because of the time pressure as well. And again, total evidence of poor quality management there. Now let's look at the requirement. Comment on the matters to be considered. Okay, and explain the audit evidence you should be expected find during your files in respect of the training cost that has been capitalized in cost of the new machinery and the trade receivable recognized into the cherry company. Uh, that means we have 5 marks here, 5 marks here, right? Uh, 1 mark per discussion relevant point for the matters to consider, and 1 mark for the evidence. Remember, we have to cover both in both scenarios. Then evaluate the audit junior concerns regarding the management of the audit of banana company. Again, 10 marks. 5 marks professional marks awarded for the skills in analysis and evaluation, professional skepticism, judgment, and commercial acumen in your answer. 5 marks available here. Let's look at the now training cost matters to consider firstly. So matters to consider at less than 1% of total cost, right? 0.5 million divided by total number of assets, that is 78 million into 100%. The training costs are immaterial to the statement of financial position. But the finance director's argument based on the idea that training costs are directly related to the assets concerned and therefore should be capitalized. However, the costs are operating costs rather than costs directly attributable to the plant and cannot be capitalized. IS 16 property, plant, and equipment. See what I told you, right? Also, by definition, an asset must be a resource that is controlled by the entity. It is unlikely that Banana can exercise control over the skills of its staff, which have been developed by the training program. Staff may decide to leave employment with the company, same discussion which I was discussing with you earlier. While furthermore, training costs cannot be recognized as an intangible asset, IS 38. This point I also discussed with you. Remember? So therefore, there are no grounds for recognize the training cost as a non-current asset, and the 500,000 cost of the training program should be expensed to profit or loss at 125%, 0.5 divided by 4.4 million of profit. This is material to the statement of profit and loss. See what I was saying. Recognizing the cost as an expense will turn the net profit per draft financial statement of 400,000 in 200,000 loss, which could be the real reason the finance director's treatment. Wow. Now, the evidence is we can draft here. A schedule detailing major categories of expenses which make up to the 500,000 as cost of the training program. Okay. Agreement of the sample of the cost per schedule to supporting documentation such as invoices provided from the external training firm. Agreement of sample of the cost to the bank ledger account and the bank statement. Confirmation that the training program was completed before the year end. That is, that none one of the 500,000 represents a prepayment of cost. Confirmation that 500,000 is the total and no further invoices received after the year end for training carried out before the year end and should have been accrued. Clarification that Banana does not exercise specific control over the skills of its staff by review of standard terms of employment. Confirmation that amount spent on the training program agrees to the authorized budget or an approved expenditure program relating to the machinery that the amount incurred is in line with expectations. Trade receivables. Now, at less than 1% of total assets, 0.3 million, divided by 78, the total receivable is not material to the total assets. Okay. However, 75% of profit, 0.3 million divided by 0.4 million into 100, it is material to the statement of profit or loss and therefore profit for the year, which is relevant given that it appears impairment loss should be recognized in respect of this amount. The trade receivables should be measured at amortized cost. Any expected impairment should be recognized at the earliest opportunity, with the receivable being written down to the expected cash receivable from the customer. According to the information provided by Cherry's administrations, it is likely that 25% of the amount outstanding will be paid. It seems, therefore, that 75% of the 300,000 trade receivable is irrecoverable, and so an impairment loss of 225,000 should be recognized. This is material to the statement of profit or loss as follows. Based on revenue, 225,000 divided by 12.5 million into 100, 1.8%. Based on net profit, 225,400 into 156%. Now, a potential expense to recognize is highly material to net profit. A further issue is that there may be inventory relating to Cherry in current assets. As Banana has several contracts with Cherry, there may be raw materials purchased specifically for use, agreed with Cherry in terms of work in progress. As Cherry is in insolvency, all activity on such contracts will cease. The immediate effect, any such inventory should be reviewed to see if it can be reallocated to different contracts or back into general inventory. If not, the inventory should be rated down to the lower of cost and net realizable value with the associated loss recognized in profit or loss for the year. Audit evidence. The initial correspondence from the administration of Cherry confirming that the company is insolvent and that only 25% of amounts outstanding is likely to be paid. A written confirmation from the administrators of Cherry stating amount is likely to be paid and an anticipated payment date. Agreement of the amount owed by the Cherry to the trade receivables account and to written confirmation from the administrator, recalculation of the impairment loss, and a review of the inventory documentation for the value of inventory relating to the contracts with Cherry. Now, B part, evaluation of the management of the audit of Banana Company. The comments made by the junior indicated that the audit has not been properly planned or supervised. There are many indicators of poor quality management which are evaluated. No audit planning meeting at the start of audit. See, I already discussed with it. A meeting is important as this is where the audit partner should direct the audit assignment by explaining to the audit team members their responsibilities, the nature of the client business, inherent risk factors, and significant risks. Identify detailed approach to the audit. If no meeting is held at the start of the audit, it is unlikely member of the audit team will understand the audit strategy, the objectives of the work they have been asked to perform, or what tasks has been allocated among other members of team. The audit partner should lead the meeting. See, as it is his responsibility to ensure that the audit is directed, supervised, and performed in accordance with professional and regulatory standards. Okay. Audit manager and supervisor are not always available. See, identified there. All audit managers' assignment should be properly supervised. In the absence of my manager and supervisor, the audit assignment should be properly supervised. Uh, okay. The longer there is a lack of supervision, the more problems will accumulate. Without supervision, the audit plan may not be properly followed and inappropriate modifications may be made to audit programs. Junior was given the task of auditing goodwill and inventory. It seems the audit work has not been properly delegated among members of the audit team. An inexperienced audit junior should not be given relatively complex procedures to perform. Both an inexperienced audit junior should not be given relatively complex procedures to perform. Both goodwill and work in progress can be challenging to audit and involve the use of judgment. Example, the evaluation of the stage of completion of work in progress, and likely junior who has only been on audits will enough knowledge and experience fully understand the complexities of the accounting and issues involved. See, already covered in our earlier discussion. The task associated with goodwill and work in progress should be allocated to a more experienced member of the team, leaving more straightforward tasks for the juniors. Junior help with inventory count procedures. The junior did not understand the objectives of the inventory count. Uh, the count should have been performed by the junior in order to gather audit evidence for the completeness and existence of inventory items. But member of the audit team should not help out the client staff with counting. Instead, the junior should have observed the client staff and assessed whether the count was being performed in accordance with the count instructions. Junior was asked to challenge the finance director. It is appropriate for an inexperienced junior to challenge a senior member of the client management. See, what I was telling you earlier, the continuous issues should be discussed with the client by the audit manager or partner as they have a more appropriate level of authority and will be in a better position to explain why the provision is considered to be inadequate. This is an inappropriate delegation of tasks within the audit team. Inadequate time to complete necessary audit procedures. It seems that either not enough time has been allowed to complete the necessary audit procedures or that in the absence of much direction and supervision, the audit procedures have been performed inefficiently. One of the key aspects of the supervision is to keep track on the progress of the audit engagement. The audit plan should initially determine appropriate timescales and deadlines. If it transpires that more time is needed, this should be discussed with the client. Modification to planned audit procedures. The audit procedures have been changed in response to lack of time. It is not acceptable to cut corners by reducing sample sizes or changing the items selected for the sample. Modifications should be discussed by senior members of the team audit team and should not only occur for genuine reasons. The danger is that reduced sample size or changing items selected for testing will not provide sufficient, reliable, and audit evidence. Samples selected may longer be representative of the population as a whole. Finally, the conclusion is poor quality management means this audit engagement has not been appropriate direction and supervision. The evidence gathered may be inappropriate and inadequate for the purpose of issuing an audit opinion. This could result in an incorrect opinion. Being issued a detailed hot and cold review should be performed to determine if any areas need extra audit work performed and to consider what measures the firm should take to improve its system of quality management. So far, so good. We are done with this question. I hope the question is clear to you. If you have any questions, you can ask me uh, right anytime, even on my WhatsApp uh, as well. If you don't have my WhatsApp is +92 302 177 7706. Uh, that's it for now. See you.